The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time, Tuesday morning. We got about 25 minutes to go until the opening bell, and we got some negative action in the market, continuing a little bit of the slide we had yesterday. You get the S&Ps down about 12 points right now, trading at 41.43. We get the NASDAQ 100 off about 30 points, 13,866. We get the Dow negative by 107 points, 33,850. And the Russell negative by about 8 points, 2220. Jumping around to commodities. Crude oil, positive 21 cents. We're above $64 early pre-market. We're currently trading at 63.63. Bitcoin, after quite the acceleration from 65,000 last week, we make a low overnight of 53,000. How about giving up $12,000 from where we were Wednesday in 6 days to 53,000? But since then, we're up almost $3,000 from where we were trading at in Bitcoin at about 53,430. We'll jump to gold, negative $2 at 1768. Gold hitting 1790 early pre-market yesterday before selling off a bit. We got silver up by 1 penny right now, 25.85, and notes and bonds, pretty calm action right now. You're looking at the 10-year, basically flat, 132.07. We got the 30-year right now, negative by 7 ticks at 157.09. We're looking at the 10-year yield, 1.60%. In terms of what else we have happening, over in Europe, negative action in a big way. We get the DAX down a full percent right now. You get the FTSE down 1.2%, CAC roll down 1.4%. Over in Asia, in the Nikkei down 2%, 1.97% to be exact on the Nikkei. So some negative action. We see the action we had, of course. We back it up. Friday, we ended at 41.83, the high going into the closing bell. Yesterday, you sell off from a price of the S&P of 41.70. We chop around about 41.50 for most of the day, catch a little bit of a bid towards the end of the day, but the sell-off really begins when Europe opens at about 2 in the morning, and then the slide begins at about 3:45. You go from 41.65 down to almost 41.30. Just in the last few minutes, though, catching a little bit of a bid. You get the S&Ps now negative by 11 points at 41.44. We'll jump over to the volatility index with all this negative market action. I kid somewhat, folks. I mean, we're sitting at 41.44 on the S&Ps, and we got a VIX almost spiking to 19 from approaching a low of 16 just on Friday. You can see the type of quick acceleration you get in these markets as we get some negative action. As I mentioned, Europe down about 1%, Nikkei down 2%. The VIX, you can see volatility premium spiking from about 17 overnight as this market picked up steam to the downside. We almost spiked to 19 in a heartbeat. VIX volatility premium coming back into this market in a big way pretty quickly anytime you get that negative action. All right, what else we got going on? Jumping around to some of the stories. We'll kick it off with some earnings. We got a big week of earnings. We got Netflix after the bell tonight as well. Excuse me. So Procter & Gamble. Procter & Gamble out with their numbers topping the estimates for the fiscal third quarter. They're going to be raising prices too. We get a couple articles up on them. Consumers are still buying more cleaning supplies and laundry detergent, but they've also started buying beauty products again. They're going to raise prices on some of its products to combat rising commodity prices. May see a theme in this, especially when you're talking about consumer goods. They take in $1.26 a share, Procter & Gamble. Revenue 18.1 versus 17.9. Net income rising to $3.27 billion, which correlates to the $1.26, up from 2.92. Net sales rising 5%. Fabric and home care segment, which include Dawn, Cascade dish detergents, organic sales growth 7% from a year earlier. And think about that. They have 7% organic sales growth from a year earlier, which is when consumers were stockpiling. They reported organic revenue growth of 7% in the beauty segment, as well as consumers have started buying skincare products yet again. Procter & Gamble's their symbol, and there you see the action pre-market. Down to 135.18. A little bit of volatility for some context and where we've been in this stock. Let's even back it up further. You really got to back things up more than a year to get a full context of where we've been during COVID. This is a weekly. You go from a price point of 125 down to a COVID low, we'll call it a 94. Quite the uptrend channel I had in here, going to 146, but we broke that, traded down to 120. Since then, though, we're going to open about 135. All things considered, not too bad for Procter & Gamble this morning. What else we got? We got Johnson & Johnson out with their numbers. $100 million in quarterly sales from the COVID vaccine. Excuse me, got a little dry throat. Johnson & Johnson, $100 million quarterly sales from COVID vaccine. Its pharmaceutical business, which developed the single-shot COVID-19 vaccine, how about $12.19 billion in revenue, a 9.6% year-over-year increase. They have a lot going on beyond just their vaccine. They expect full-year profit of $942 to $957. Market basically looking for what they came out with. They are in $259 versus $234. They beat on revenue as well. The pharmaceutical business, almost a 10% increase. The consumer unit, which makes products such as Neutrogena, face wash, Listerine, $3.5 billion in revenue, down 2.3% from a year earlier. Medical device unit up 7.9. Interesting how we're comping against all these comps from when the pandemic began just over a year ago. All right, jumping over to Johnson & Johnson to pull up their chart. And there you see the COVID from 150 down to 110. We've been chopping around for a while. You really accelerated higher when we started getting some vaccine news. We're going to put it on daily. Zoom in. You were at a low coming into November when we started to get some of those efficacy numbers. You traded from 135 to 173 this morning. Pretty muted reaction on their earnings. As you see, we're trading at about 162. We closed yesterday at about 163 for Johnson & Johnson. Let's just take a look at some of the FANG stocks. Quite the pop and then the pullback we got on some of these yesterday. This is a 15-minute. Let's put it on a 5-minute to really see the acceleration. Amazon trades up $50 on the open, gives it all back by about 10:10 a.m. yesterday. We trade lower. This morning, you get Amazon basically unchanged, off slightly at about $33.70. Microsoft shares right now basically flat as well to $258.39. We're up to $261.48. Facebook shares, $301.50. Now, Facebook, put that thing on a daily. We consolidated from basically July all the way through. We break out of that consolidation coming into April, make to $315.88. I mean, you've basically come back and tested some of these highs. The high from August 25th, $304.67. We're basically just under that number right now at $302.24 in Facebook shares. And we get Netflix after the bell tonight. Netflix shares trading basically flat. Netflix trading at $554.62, charged higher yesterday into the close. We'll pull up the Analyze tab. They're out with their numbers after the bell. How about a $32 move, essentially? $31.87. We'll take a little bit longer look at Netflix. We'll look at some of the volatility premiums priced into this equity coming into their earnings after the bell tonight. But we'll look at the simulated trades, even just pulling up. So these are Friday expirations. You look at the money. You're talking about implied volatility of about a $36 move by Friday. It's a lot of volatility in this stock. You take a look at Netflix, where we are on the daily, nearing the top end of that consolidation. And again, we've been in that consolidation since about the beginning of July. Netflix trading at $554, flat right now, pre-market coming into their earnings after the bell. And again, they're going to have some big comps. Imagine where we were last year, right? We're coming into the COVID pandemic. Lofty expectations, already lockdowns beginning in March. We'll see what they come out with after the bell. Stay tuned, folks. We'll be right back talking with our man Kevin Hinks from the TD Ameritrade Network. Stay tuned.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We get the markets catching a little bit of a bid right now. We got S&Ps trading at 41.45, just back to 8.30 this morning. You were trading at 41.37, so about an 8-point lift right now. And the S&Ps, NASDAQ 100 slightly in the red at 13,871. We got the Russell negative 7 points and the Dow negative by 90 points right now. But as you see it, all the markets catching a little bit of a lift in about the last 45 minutes of trading as we go from 33,800 in the Dow up about 70 points, 33,869. But you see the acceleration really begin when Europe opened. As we mentioned, you get the DAX right now to pull it up. We get the DAX trading down about 1%, just shy of 1%. The FTSE down 1.2% right now over in Europe. All right, what else we got going on? Continuing the trend, seeing what we got going on in terms of stocks with news. And it's earnings season in a big way, folks. Why don't we jump to Netflix real quick to finish up that conversation instead of jumping around. So Netflix shares up about 554. I was kind of rushed as we were finishing up the analysis in terms of the expectation. Now, Thinkorswim, they are a sponsor. TD Ameritrade, folks, they have a great platform, though. I'd use them anyway, no matter what. You jump over to the Analyze tab. We'll look at the simulated trade. So number one, you got a one-day market maker expected move. So that is literally the volatility that is priced into Netflix for their earnings event going on today. So you're talking about $31.85. The cool thing is then you have the implied volatility for the weekly option. So this is your one-day volatility premium. This is your weekly volatility premium that expires on Friday. Another way to analyze that, which is pretty cool, is that you got about $32 of volatility priced in for the earnings event tonight, and then suck that volatility premium out of it, and you got about $4. Just $4 in a $554 stock outside of the earnings event that's going to be priced in to expiration through Friday. And pretty cool. I mean, you look at the option chains, you want to go out an extra week, you're talking about $42, right? This is where you really can look at some of these volatility setups in terms of the premium being pushed in this. And you see, this is just a hypothetical. I'm not even sure. Maybe I was setting that up the last time they had earnings. $31.85 coming into the event tonight and about $35.87 for the weekly options. That's a decent move, but man, you want to talk about some volatility. Taking a look at Netflix, just for some context here. Last time they came out with their numbers, folks, you traded from $4.95 up almost $100 to $5.93.29. Day leading into earnings, we had a low of $4.93.54, and we almost eclipsed that by pennies, folks. $100. That's a 20% move Netflix had on their last numbers. Now, really interesting that we actually gave it all back, all of it. and we gave it all back by March 8th when they came out with their numbers about January 19th. Since then, we've climbed. Just for some curiosity, let's take a look. Let's put a Fibonacci number. Where are we on that full retracement? From the 593.29, we've bounced about a 618. So we're bumping right up to that 618 level. It'll be interesting to see where Netflix goes from here. Going to be some lofty expectations in a big way, as we've been locked down for about a year. Things don't get much better for a company like Netflix in terms of movie theaters shutting down, right? All types of social things going on, shutting down. And Netflix, from pre-COVID levels of about 389, you spiked to 300 initially, and from there we've been chopping around since about July. Common theme at about 554 right now, coming into their numbers after the bell tonight. Okay, in terms of stories out there, what we have going on. So a story out there, Kansas City Southern. They're up almost 20% after Canadian National Railway offered $3.25 a share in stock and cash for the company. They had previously offered $2.75 from Canadian Pacific, I guess, so they get a little bit of a battle there going for Kansas City Southern. The Canadian National offer also includes $200 per share in cash compared to $90 for the Canadian Pacific offer, so they got more cash. They got a bigger number overall. And Canadian National, offering up that big amount. They're trading a little bit lower, and Canadian Pacific maybe not going to win that bid, trading a little bit higher on that news. AutoNation out with their numbers, the car retailers. $2.79 a share. How about market was only looking for $1.87? Revenue topped as well. Same store sales up 27% from a year earlier. But keep in mind, folks, car sales just basically disappeared during the pandemic, right? If you locked it down, school stopped, work, businesses shut down. One of the last things that you were doing was saying, geez, I got to go out and buy a car today, right? Did not happen. Some of these comps are going to be just abysmal that they're going into. So, of course, the numbers are going to be through the roof. AutoNation, we're going to be trading a little bit higher. That's the weekly. My goodness, quite a weekly it is. You put this thing on a daily to see the full context. Pre-COVID from 50 down to 20. We're sitting at 97.57 in this morning. We're going to open at all-time highs, putting it on a 15-minute. There's their volatility on some strong numbers on AutoNation coming out with their numbers this morning. IBM out with their numbers. Let's see. I thought I had this one up in its own tab. Getting into the numbers, $1.77 versus $1.63. A slight beat on revenue. Revenue grew by 0.9% annualized basis in the quarter, compared with a 6% decrease in the prior. Let's see how Big Blue is trading this morning with their numbers. IBM, nice little spike from 133 up to 140. We're giving some of it back, though. We're at 136.66. You put this thing on a full year, we've just been chopping around even. Let's back it up to get the full COVID low. And geez, I got a channel line on here. Not a good channel line when you're looking at the monthly. We've been chopping around. That's quite a channel line in a big way. But you don't have to be a master technician to see the trend on a monthly basis. We are going down. Now, just for some context here, where is this top line bar? Maybe it lines up actually right there. Very possible that this thing could line up right there. Now, we may gap above that line right now, depending on where you put it, right? It's an art, not a science, folks. It could easily, the top boundary line could be right here, where you're matching up to 3 peaks, whether it's the peak from now this is a monthly, going back from April of 2013, and then you got a high of March of 2017, and then you got the high right prior to COVID in February of 2020, or you could probably take that and just tone it down a bit where you're matching up with the highs of 2014. Nonetheless, on a monthly, we're bumping right up against that level, and you're actually going to jump above it, which is interesting. You put it on a daily or even a 3-year weekly for some context, and just basically chopping around. But that might be a jump. We're trading at 136 right now. You see, we're going to basically open right where that trend line is on a monthly basis on IBM shares. And look at what they had, just for some context. Last earnings, not what you wanted to see. You go from 130 down to 117, and we actually climbed all the way back to be above those levels right now coming into this number, and looks to be strong numbers. We're going to open basically the highs we had from last month at 137 on IBM. We covered Procter & Gamble. Lockheed Martin out with their numbers. LMT, defense contractor. Results topped estimates. I mean, it's like constant, folks. Has there been a company out that's dramatically missed numbers? Not many of them, yet it's all priced in a dramatic fashion. So they beat as well. Company boosted its full-year forecast. Variety of financial metrics, including sales and cash from operations. Revenue came in slightly below, though. Not what you want to see in terms of revenue shrinking. And Lockheed Martin, this is quite a chart. Now, you put this thing on a 3-year weekly for some context in terms of from 442 spiked down to 275. We're not back up there yet. And this morning on those numbers, on a slight revenue miss, we're a little bit lower to 388.67 from 391. Defense contractor, they're going to be just fine, though, folks. And Johnson & Johnson, we reported as well. Let's take a look at them as we come into the opening bell this morning. Johnson & Johnson, slightly lower. We'll take a look at some of the other stocks in terms of Moderna. Quite a run Moderna has had recently, right? Look at that run from 120 to basically 168 yesterday. Gives it up a bit. And Pfizer shares we'll take a look at as well. Pfizer, same thing. Quite a run from basically March 2nd, from 33 up to 39. We're going to open flat this morning right now, just under $39 on Pfizer shares. Let's jump over to the VIX this morning, see where we're at. How about a 1538 print last week? We're back up to 1822 this morning, or 15-minute, as the markets pare a little bit of the losses, but pay attention to the fact that S&Ps are down only 11, and we almost hit 19 in the VIX this morning. Stay tuned, folks. We'll be right back for the opening bell.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got markets right where we basically picked up pre-market. S&P's down by 10. We got the NASDAQ. Tech stocks catching a little bit of a bid, pushing towards flat to positive right now. Give it a second. We might be green in the NASDAQ 100. Dow off 124 points at 33,835, and the Russell negative by about 7. Jump into commodities. We got crude giving up some of the gains we had overnight. Crude trading at $63.47. Bitcoin, as we talked about, surging about $3,000 from the lows close of 53,430. We're trading at 56,300. Let's check in on Coinbase. See how they're trading. Seems to be settling basically right where we were yesterday. Excuse me. You're down about $1 in Coinbase at 331. All things considered, right? In terms of where they are, Coinbase right now, you're talking about a market cap of $66 billion. Really interesting, though, because the number got thrown around $100 billion a lot of $100 billion talk coming into their IPO, and that would be a 50% pop from where you are right now. Imagine you're an investor, right? You said, yeah, it's worth $100 billion. Well, it's worth $66 billion. Not quite what they were looking for in terms of 50%. Maybe they were trying to push this stock. They almost got it up. They got it up to 430 on the open, but the market, a little bit wiser than that, trade to lower. You did get a pop overnight of their first night, if you recall, that on some of the news. I mean, ARK, Kathy Wood, she got a lot of press out there. They sunk, her funds sunk about $250 million into Coinbase. So catching a little bit of a bid, but low volatility since then. You're trading at 331, especially when you consider the low volatility of Coinbase with the rapid pullback we got in some of those cryptos over the weekend. Coinbase right now flat this morning. All right, let's take a look at the gold contract real quick. Gold, jump into a daily. Now gold is back to the 50% of its full. I'm going to put this on a 5-year daily. We'll zoom it in so you can see the full COVID low. We make a low of about 1450. You trade up to 2089. 1700 seems to be a nice area here for support on gold. You know, you dip below that level a couple times. We did it in March. We did it again towards the end of the month before we caught a bid. You also found support at that level back in April, back in June. Might be an area that you look for a rise of gold. Now, the one thing here, let's take off the Fibonacci numbers here. We're going to add just a simple line, because where does this trend line? Now, this is where, you know, sometimes I like a little linear regression, folks. You know, it doesn't have to be perfect, okay? You can always line them up peak to peak, and when they do line up like that, it's great. But sometimes it's a little bit fairer, I think, to the trend to try and find a nice area of potentially linear regression, and maybe that's a little bit fairer to the trend going on, right? That's what I try and find, is what's fair to the trend of where the market is heading. And that seems to be maybe a fair trend on this gold chart. Again, basically pointing to a critical level in gold. You know, we have some nice support at 1700. You could step into this. I've been thinking about stepping into it a little bit myself. It's a nice area where maybe you give yourself 50 or 70 bucks to the downside. You really accelerate through this, though. You know, gold with inflation talk coming up, etc., you could see a rise to 1700. Seems like the next stop would be both of these highs you have back here from the beginning of the year, January 6th, as well as the high we had from November. You're talking about 1900 and change in gold. Critical level, though, you got a downtrend we're going to break above potentially on a daily. I'm sure it will show up a similar category on a weekly. There you go. And gold bumping up against the upper boundary. But again, where we put that line, right? Let's activate it. What's fair to the trend? You could be a lot higher. You really could. So see where gold climbs to. All right. Let's see what else we got going on in the market. Boeing, they're out here. They want to keep their CEO potentially until he's 70 years old. So Boeing said on Tuesday, raising the mandatory retirement age of its 64-year-old CEO from 65 to 70 as the company faces challenges from the pandemic. Yeah, and also in the aftermath of their 2 crashes. CFO is going to retire in July. And then they're talking about the CEO. Under Dave Strong leadership, Boeing has effectively navigated one of the most challenging and complex periods in long history, the chairman said. Given the substantial progress, they're going to keep him in there, at least for the time being. Boeing shares still under some pressure, though. Boeing, there's your 3-year weekly. Quite a pop we've gotten, but we just pulled back from about 278. We lost about $40 almost. We're trading at 239 in Boeing shares right now. You put it on a 5-year daily. We get the full run we had. 446 was when the crashes started, unfortunately. We started to realize there was a big problem there. And then COVID, we're talking about 350 down to 89. We're sitting at 239. Some of these Fibonacci numbers, I mean, you're bumping up to some pretty critical levels here. Excuse me, you pull up drawings. Let's pull up the Fibonacci numbers, see how far we're back. If you want to get the full COVID low, interesting, the 618, these 3 levels, folks, the 382, the 50%, and the 618, all critical levels. Boeing bumping up against that level right now at about 250. We're trading 239.30, but they look to keep their CEO. The board likes what's going on there. All right, what else we got going on? United's out with their numbers. United lost $7.50 a share for the first quarter. The market was only looking for $7.08. Revenue slightly below estimates for the quarter. Higher fuel costs and still dampened demand. United said it anticipates a return to profitability later this year. You got markets trading lower, though, on their miss, UAL. And basically, we're actually flat now. No, we're not. We're down 4.2%, 52.69. We'll zoom it in. There's the last year for United from 90 down to 1780. We're trading at 52. These international airlines, they got a long way to go to make up everything that they've lost. International travel, going to take a little while in a big way in terms of where we go. Now, I got a lot of articles over here talking about, one of them was the State Department. Where are we? Let me try and find it. Here we are. No. No, one of them was the State Department talking about 80% of areas in the U.S. now are going to be no-go zones almost because of COVID. Yeah, I'll have to find it at the next break. But that is affecting these airlines in the international sector in a big way. Now, you look at domestically, though. JetBlue, trading basically right where we were prior to COVID, 1961. JetBlue, though, down about 2.9% this morning. You got Southwest down 2.2%, actually above where we were prior to COVID. And let's check in some of the other ones. American Airlines right now down 3.7%. Delta Airlines down 2.4%. All of those airlines pulling back a bit. Let's check the cruise lines. Carnival down 2.8%. Royal Caribbean down 2.7% as well. And we'll finish it off with Norwegian down 3.4% as well. All right, folks, S&P is catching a little bit of a bid. Zooming it back into a 15-minute. You see the action this morning. We were as low as almost 41.30. Markets now, S&P is just negative by 7 points, trading at 41.48. A little bit of an acceleration on the open right now. You see that bar, 41.48. We were as low as 41.41 on the open. We got tech stocks surging higher, too. Can't hold down those tech stocks. 13,895, basically flat for the NASDAQ 100. We'll jump over to Netflix shares. There's some anticipation of their earnings. Look at that pop from about 552 to 563. Looks like some optimism in Netflix coming into their numbers. We'll jump over to Disney shares ahead of that. Disney pulling back a bit. Quite the slide for Disney yesterday. Some of these companies, just a lot of volatility right now as they try and figure out what the future holds. Excuse me. Let me put this thing on a daily. Zoom it in. I mean, Disney, I'm looking for an ABC to 226, the B point 183.40. We've been holding pretty relatively well above that level. That's after we charged higher in February. That area's turned into some support after being a little bit of resistance at the B point. You can see your A point 117 to 183, your C point 160 lines up to A to B, C to D, 226 for Disney shares. Stay tuned, folks. We'll be right back after the break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. The S&P is negative by 9. We got all the markets slightly in the red this morning to kick things off. Jumping over to a little bit of crypto. Amusing how much crypto gets into the show these days, but you got to talk about it. Dogecoin. How about a $50 billion market cap for Dogecoin out there? Bigger than the likes of Ford and Kraft. Dogecoin, if you're not familiar, a cryptocurrency. We're probably all familiar if we're watching this show and in the markets as well. It basically started as a joke. What's so amusing here is that basically you have vehicles that it's a hot potato game, folks. I mean, everybody knows that it's only worth something if the next person is willing to pay something for it. Okay, you know, I was listening to some great analysis yesterday late in the night on Bloomberg, talking about that there's no real developer community for this, right? People aren't making huge leaps and bounds to facilitate the use of Dogecoin in everyday life. I mean, the likes of, to compare it, Venmo, the story out there we're going to jump to, Venmo users can now buy and sell Bitcoin and other cryptocurrencies. Starting Tuesday, Venmo is going to show users a new feature that lets them invest in 4 different cryptos with a minimum spending requirement of $1. Those 4 cryptos, you're talking about Bitcoin, Ether, Litecoin, and Bitcoin Cash. Minimum spending of $1. Development expands on an initial move by PayPal to let users buy crypto through its main platform. More recently, the company started letting people use crypto holdings to pay at millions of online merchants globally. Venmo, 70 million users. I've used it myself many times. Point being, back to Dogecoin. Dogecoin isn't getting used on Venmo right now. Dogecoin isn't getting used on PayPal as far as I know. You can trade Dogecoin on Robinhood and other crypto exchanges as well. But it is really remarkable that it's basically a $50 billion hot potato game that might serve no purpose for actual goods. It is a store of value as long as somebody else is willing to pay that value tomorrow. All things considered, though, that $50 billion could disappear in a heartbeat, folks. It's a hot potato game. You better be quick if you're playing hot potato and you're playing it for billions of dollars. Nonetheless, you got Dogecoin soaring again, 500 billion market cap. And, I mean, yeah, bigger than Ford, Kraft Heinz, and almost Twitter at $54 billion. Does it say where we're trading at now? Yeah, it doesn't even put a price tag on it. Shame on them. I mean, I know we're up to about 35 cents on Dogecoin. I'll check it out in terms of where we are. Let's see. I'll be able to pull it up. Dogecoin, where we're trading at. 38 cents now. We were as high as 42 cents, Dogecoin. It was trading at fractions of a penny, folks, and that's probably where we'll be back at some point, Dogecoin. Don't confuse the run that Bitcoin had from nothing to everything to 56,000. It's not happening with Dogecoin, folks. It's a fad. Elon pumped it up at one point, right? You had Mark Cuban pumping it up at one point. But unless it gets facilitated for use, right, unless you have articles coming out where you can actually use Dogecoin, where there's going to be demand for it, unless you have articles coming out that Elon is going to sink some of the Tesla balance sheet into Dogecoin, don't imagine that's happening. Even Elon, Grand Elon with his grand aspirations, don't envision that he's going to be taking Tesla money and sinking it in Dogecoin. So just remarkable. And jumping to the next Tesla story. So Sad story, of course, over the weekend. You had two people in a Tesla. Seemed to be no one was driving. You had somebody in the passenger seat, in the back seat, both killed. 4-hour fire in there. Neither of the two occupants in the driver's seat. So you have Tesla with no one driving crashes. And the story out there this morning saying that Elon Musk saying that it was not, that the self-driving feature was not engaged, was the story out there this morning. Tesla shares pulling up their symbol. Whether you believe that or not, I don't know, but Tesla's up 2.2%. What are they doing in the back seat and the passenger seat if they weren't trying to use the self-driving feature? Seems to be the next question, reasonably. But Tesla getting a little bit of a bid on that, up 2.2%. Remarkable when you think about barely negative from the 740 we closed last weekend. But be safe out there, folks. You got a vehicle like that. You know, every car company says you're supposed to be paying attention. You're supposed to have your hands on the wheel. And most cars, they're supposed to catch, you know, you're supposed to be able to catch the car if it makes an error. I always joke with friends, if you use a cell phone and the autocorrect feature screws something up, I say to them, yeah, right, we're supposed to have self-driving cars, and meanwhile, the autocorrect on my $1,000 cell phone can't even figure out a cryptic sentence, right, where it takes some word, changes it to a word that makes no context in the sentence that it's in. It seems like something, if we're going to have the technology to have self-driving cars driving all over the country, that you might have a computer smart enough to realize when a sentence makes absolutely no sense. Meanwhile, when it does that thing where it auto-corrects your word to a different word that makes no sense, keep that in mind the next time you think about cars being infallible and putting your life in their hands, man. It's pretty remarkable. Not smart and a deadly game, unfortunately, for two people out there. But Tesla, you're gonna continue to see it happen, folks. We got, you know, tens of thousands of people, I think, that die of auto accidents every single year right now. As we come into autonomous vehicles, and 2 deaths get the type of notoriety that those did yesterday, unfortunately, they're going to happen because the roads are dangerous. Wear those seatbelts out there. Okay, what else we got going on? Let's see. We got a question in the YouTube Tigers Den over here. Amazon mirroring Netflix since July passed. Can we deduce this will continue? It's a great question. There's a lot of companies doing this, right? In terms of the companies that really got ahead of themselves during COVID, in terms of you got Amazon likes. So Amazon initially, prior to COVID, we got a 3-year weekly here. We're trading at 21.45. You do pull back slightly to 1,600, then we accelerate higher. We've been chopping around this consolidation since July. We pull up Netflix. Netflix shares, great point. Very, very comparable chart from 391 down to 300, up to 557. I mean, these were two of the companies that the market figured out ASAP. Hey, guess what? Netflix is going to be fine. Everybody's going to be ordering everything they ever need online because of the pandemic. And oh, by the way, we're also going to be sitting at home watching shows all the time. So Netflix is probably going to be doing well as well because we're not going to be going to movie theaters. We're not going to be going to amusement parks. We're not even going to be going to eating at restaurants for a while. And yeah, you're right. They are behaving similar. Now, there's going to be a dichotomy here, as in how do they both come out of the pandemic? I mean, they're both super strong companies in the long run. Great companies to own in the long run, even at these levels. You have consolidated for a while. But you could see a divergence. I mean, you're just seeing basically both of these equities are catching up to the prices that they put up last July. As in, the market knew they're going to do well. They're going to do well for at least the next year or two as we come out of COVID, as we get through this. You have Netflix nearing the high end of that consolidation area. You have Amazon nearing the high end of that as well. But now the market needs to react to how they're going to behave over the next year or two. And that's the question, right? Now, Netflix continues to show strong numbers. I mean, as I talked about, you back it up to their last earnings. Everybody was worried about growth. Netflix crushed it out of the park, traded up $100, but we did give that back to $500. We've now climbed again to about $560. You know, they have some competition on the block. But Netflix, I think what you're seeing here is that even with competition on the block, doesn't mean that they're going to be the ones getting canceled in any way. Disney shares, quite a different story. Disney with a lot more woes going on in terms of the parks being closed, movie theaters being closed. Disney made $10 billion, I think, in 2019 off box office films alone. And then, of course, you have the likes of Discovery coming into things. They've been in the press with Archegos recently. You have Viacom coming into things in a big way as well. Both of those continuing to slide a bit from their recent accelerations to lower prices. But, yeah, they could behave. But, I mean, they're different companies. I think now what's going to happen is these charts are going to begin to diverge depending on how those companies do. But always nice to be chopping around near the upper boundary line of that consolidation with both of them coming into their numbers shortly. I think Amazon's got them next week. We'll talk about that in a moment when we come back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And just like that, folks, we got tech stocks back in the positive. NASDAQ 100 up 26 points. We got the S&Ps negative by just 6 points. All the markets catching a little bit of a bid right now. S&Ps at 41.49. We got the Dow off 106 points at 33,850. Jumping over to cannabis. So interesting action today of all days. We got 420, which is cannabis culture. Talk about 4:20 in the afternoon. People like to smoke cannabis. Well, today's April 20th, 4:20, so that's a big day. Interesting that you get on the heels of that the House passes the cannabis stocks rally. The House passed the Safe Banking Act. So this has to do with basically cannabis companies in states where it's legal, whether it's medicinal or recreational, being able to bank. Pretty remarkable vote when you think about the partisan nature that we find ourselves in. 321 to 101 in favor of the bill that will protect banks that do business with companies in states. Many of these banks, folks, even though it's a multi-billion-dollar business right now, forced to do all of their transactions in cash. That hampers, job growth. It hampers the whole industry. It also leads to crime. You're dealing with cash to the tune of thousands, if not hundreds of thousands of dollars, if not millions of dollars in some of these companies. Hopefully that gets passed. It heads to the Senate next, and hopefully they don't get too bogged down with what they want to add or not add into that bill and get that passed. But interesting that on the heels of all of that, you got the cannabis companies actually trading lower. There's Canopy down about 1.8% today. Tilray shares down 2.5% today. Chrono shares down about 2.5%, as well as cannabis stocks getting a little bit of a pot hangover. Remarkable. Do you think about the acceleration? But maybe there's some negative optimism built into the Senate there on the banking side of things, because I imagine these companies would really enjoy that getting loosened up. But the one thing they do need, folks, no matter what those cannabis companies, they need marijuana to get removed from the Schedule 1 drug designation, because that is the biggest thing out there, rightfully so. Some of the critics of that Safe Banking Act are saying, hey, why aren't we doing really what we have to do, which is addressing the real problem that marijuana is still a federal Schedule 1 drug, which is even worse than like heroin and cocaine, I think, or Schedule 2 or something silly like that. Nonetheless, you got some of those cannabis stocks trading a little bit lower. All right, folks, thanks for tuning in. S&P's minus by 6. We got tech stocks positive. Go figure. We got Netflix after the bell. Netflix up 1.2% today. Stay tuned. We got our man Basil Chapman. He's coming up live next with the Tiger Technicians Hour. Stay tuned, folks.